Good morning, everyone. It is November 12th, 2016, Saturday morning. The markets are closed, and boy, I have a story for you. This morning, we are going to talk about market volatility, covered call volatility, and overreaching, trying to get higher premiums, taking on risk. Not a good plan. So it's one of those situations where I wrote a covered call. I tried to overreach for the premium, trying to make extra bucks. I watched one of those YouTube videos where the guy was just making money hand over fist. I went for it. Luckily, I did not overreach on my share purchase when I did this. So I only risked a couple hundred shares. But boy, I really found myself in a bad spot. So I hope you learned something from this video. Hope you find it interesting. So before we get going, if you find covered call writing interesting and you want to make guaranteed income, you want to learn how to make guaranteed income on a monthly basis, hell, weekly basis, okay? You need to have a financial education. You need to learn the finer intricacies of writing a covered call, okay? We talk about that. I talk about that because if you've watched my videos, you know that this is an experiment in my life, okay? I give you a look into my life as to how I plan to make guaranteed income in retirement using covered call writing strategy, okay? You'll find a lot of videos on YouTube on how to write covered calls, but I dig deeper. And some may find it boring and click off the station. Others that are interested, you'll get maximum benefit out of this because I really look into that. I really look into the finer points. Okay. So I want you to subscribe. I want you to get that email when I do these because I do them once a week, maybe twice a week. Hell, I'm going to do one tomorrow. Okay. I talk about a lot of things. I talk about the intricacies of a covered call writing, and I also talk about ideas. Yes, I get out there, talk about ideas that may or may not fit your investment strategy. But if you're interested, subscribe so you get that video. You get that email that says I created a new video. Okay, so let's go ahead and start. We're going to talk about, again, let's go ahead and talk about my volatility trade. I talked about this in a prior video and absolutely got snake bitten. I think I mentioned in that video that I listened to a trader that traded coming out of the Great Recession, and he was selling. He was writing covered calls in his 401k retirement account, and he had just tons of shares to work with. And in the case of TNA, he was using the high volatility TNA, which is a 3x indicator of the Russell 2000 small cap. I know some of you out there just put your hands on your head and said, "What are you doing, dude? Volatility." It's not like you picked a Netflix or maybe a Fitbit. Dude, you just went off the chain. You just went off the train, off the rails with this. I mean, you actually went, you didn't just overreach, right? You reached your hand across the snake trap, okay, the snake pit, and got lit up. And what I mean by this, what do I mean by that? What I mean by this is this. I picked TNA and went ahead and bought the stock, got the juicy premium of $2. I wrote about that. $2 premium. I think it was a 50-cent out of the money. I was like, wow, I'm here to pick up crumbs. This is beautiful. Well, after that, TNA with the markets just went south. Okay. That option, had I sat on my hands, went to nothing. But TNA went all the way down to $62 a share. Remember, I'm in at like 72, 73. Well, it fell. I think it fell at its low of $60 in a week, 2 weeks. So what did I do? As that $2 premium kept falling, I kept buying it back and writing the next out of the money strike. A little bit lower, right? So as it would fall, I'd buy it back. As it would fall, I would buy it back. To the point, I actually bought 100 shares. I bought another 100 shares to reduce my dollar cost average. And essentially, I bought in at, I want to say 73. I brought my dollar cost average down to 67x. By sitting on my hands, I reduced nothing. Crying my beer, but being active, I was able to sell a call, buy it back, sell a call, buy it back, and reduce my dollar cost average down to 67x. But what ends up happening next is essentially the fear of most all covered call writers. The stock turned around. Actually, it turned around on Monday. I had written a 68.50 covered call, meaning I make money on the trade, a mere $60, but I make money. Look what happens. The stock actually, the market's go on a tear. New president is elected, and this is rolling higher to the point where I can't even buy the option back. Expiration is right here. Okay, let's go to that option. I just want to show you the volatility that is off the hook. This is the volatility of TNA. These are a couple days. These are just print screens of the stock movement and the option movement. Okay, remember, this is a 68.50. This thing is ripping the leather off the ball, and I'm doing various screenshots. Look at this. So I got caught where now I had to let my shares be taken away at 68.50. I could not use an exit strategy to help this situation. Sure, I could have bought it back. The option was $17 at the end of the day. I got paid $1.70 for this 68.50, and it was worth $17. I let this go. My shares are taken away. I collect the 68.50. Well, the premium of $1.70 was factored into my dollar cost average, so I don't make that. I don't make any more than 68.50. That's it. This stock ended up, as you saw on my last chart, it ended at $85. Now, again, I overreached, got caught, and I end up luckily making a little bit of green money, $60. But look how this works. This is volatility 101. Should have never been in this trade. What do we talk about? We talk about, if we're going to play stocks, we want to play the stocks we can go to sleep with, feel comfortable with. TNA is not one of those stocks for me. Okay, I will not be investing in 2x ETF indicators, 3x, 4x. I will not. Okay, I make positive trades with great companies like Microsoft, Nike, Disney, Heinz Kraft. Okay, time in and time out, picking up crumbs, weekly paychecks, monthly paychecks. They just keep adding up. I try to step out of the box, overreach for big premium. Look what happens. I get caught. And had the market not turned around, and had we gone from 18.1 on the Dow, say a Trump election, a win, takes us down to 17.1 or 16.1, this stock at $73 is 53, 43, and I am left holding the bag. Okay, so in the end, volatility is scary. Make sure you're investing in stocks that you can go to sleep with, you can live with in down times. I would also suggest that as a stock is trading down, try to buy the option back, write another. Let's have strategies that keep us active, reducing our dollar cost average. So when it does turn around, we can, if anything, break even quicker, or we can have some exit strategies that allow us to make some money while it goes up. Okay. So with that said, hope you learned something. Hope you found this video interesting. And until next time, I hope all your covered calls are profitable.